Hi, I'm Jim Jubak, and welcome to this week's quick pick, Wolfspeed. Wolfspeed is a stock you've probably never heard of, although if you've been around as long as I have, you once knew it as Cree. They were a maker of LEDs. That was their specialty. Well, Wolfspeed is now very, very volatile, very hot. So in the last 3 months, the stock is up about 37%. Last week, it's up 32%. Let's go to a chart. This is a tech stock. I'll tell you about their business in a minute. So you can see they've followed the tech pattern of just falling through the floor until June and then a rally. But this extraordinary move, one of the reasons I'm talking to you about it today, I wouldn't buy this stock now. I don't like buying momentum stocks after 30% one-day gains, but I think you ought to put it on your watch list because it's very interesting. The reason that it went up is that there are a lot of people, a lot of experts in the field who think that we're reaching the point of diminishing returns with current silicon-based chip materials. So Wolfspeed is sort of at the cutting edge of new chip materials, silicon carbide and gallium nitride. If you remember, again, if your memory in the tech sector is long enough, you remember the whole gallium arsenide boom for a while. But this is being driven by the same thing, but it looks like these materials are actually going to turn into real chips. The company right now is not profitable. That big 30% pop came when it announced fiscal fourth quarter earnings, which were better than expected, but we're still talking about roughly a 50 cent a share loss. So we're still trying to get up to speed. But what they announced that really drove the stock higher is they're getting a lot of design-ins. When a potential customer says, oh yeah, you know, we can't use it in our current generation because we're not going to rip stuff out of our current product, but the next generation or the generation after that, we think we'd like to put you in the design process. So in the fourth quarter fiscal year, they announced that they had about $2.6 billion worth of design-ins. Design-ins don't always turn into sales, but this is the kind of trend that you want to see. This is only, at this point, about a $13 billion market cap. So you got a lot of potential going on in here. Sales are growing very fast. Profitability is still a way away. I think that given what we know about how bear markets treat stocks that are very highly priced and not profitable and still in development means that there's a likelihood of being able to buy this at, again, another dip somewhere down the road, and that's what I'd be looking for. So thanks for watching. This has been Jim Jubak. Subscribe and give us a like. You can also go to my free site, that's jubakpicks.com, for more portfolios, for 3 portfolios and free alerts every day, or my paid site, jubakam.com, which has earlier alerts and 6 portfolios instead of 3. It's where we do some more volatility and some options and ETFs. So all of that in one package.